Continental Airlines' third quarter loss narrowed more than analysts expected today based on cheaper fuel costs. Jim Corridore, airline analyst at Standard & Poor's, says airline revenue is extremely weak, and he expects it to remain that way. Jim, welcome to Bloomberg News. Good to see you again.
Thanks, Mark.
Your outlook a little bit pessimistic. Tell us why.
Well, my near-term outlook is pessimistic because the airlines have been seeing basically the trend for the third quarter so far has been revenues down more than we expected, yields sharply down, and we've heard comments so far that indicate that it's not getting better anytime soon. So, for the rest of 2009 into early 2010, I think that the environment's going to remain weak.
Did today's Continental numbers surprise you?
But for Continental and for American, it surprised me to the extent that yields were down. I mean, the companies have been reporting their monthly traffic statistics, and they've been giving some indications that things were bad. But, yeah, the environment is weak. If it wasn't for the large drop in fuel that they're seeing, there would be large losses across the group.
And some are saying the good news for AMR, the parent of American, of course, is that it managed to raise enough cash in the quarter to stay in business. Is it possible, though, at this point, or is it premature to predict when AMR could return to profitability?
Well, profitability is going to depend on improvement in the overall U.S. and international economy, business travelers starting to fly again, and oil remaining low. And those are things that we expect will be in place starting in 2010, but are not in place right now.
And as far as Continental, as we addressed here, reporting a narrower than expected loss, mentioning the jet fuel theme, tumbling 51% in costs there. But we know oil prices are on the rise this quarter. So is that going to be another headwind for Continental? Will they not be able to count on that as supportive?
Yeah, it does seem that anytime we see strong economic news, oil prices do seem to jump, and that's going to create a headwind for Continental and the airline industry as a whole. They are entering into some hedges right now because they do realize that oil prices are relatively low compared to where they were last summer. So they're hoping to hedge their, in case we start seeing a move up again.
Jim, could one of those hedges be caused by the annual seasonal cash burn?
Well, yeah. Well, right now, the seasonal cash burn is not as bad as it could be, precisely because the fuel prices are so much lower and they're getting big relief there.
Any problems with any airlines that you see? How about debt-to-cap ratios?
Well, debt-to-cap ratios are extraordinarily high across the group, and they've been getting worse. But on the positive side, the capital markets have eased, and they have been more they've been more able to lend to airlines lately. So American, United, Continental, AirTran, they've all engaged in financing transactions over the last quarter. They've added to their cash levels.
So you're seeing a thawing in the credit markets?
Well, yeah, the credit markets are providing capital to the airlines, which is helping them stay afloat right now during a difficult period.
And how much of a good sign is this? Continental reporting it's going to increase capacity in its main jet operations next year by about 3%. This after the last 2 years of airlines, as you know, bringing in capacity. So is this a sign that business demand is revving up, or is Continental simply replacing flights that it canceled due to scares like H1N1?
Yeah, Continental is not making a statement that it's optimistic about the environment adding to capacity. All they're doing is they pulled down a lot of capacity during the summer because of the swine flu epidemic in Mexico, and they're just adding back that capacity. So just a regular normalized run rate of that capacity leads to growth next year. So they're not adding at all.
I'm sorry, Laura, go ahead.
Oh, I was just going to follow up and say, so not a trend to get excited about. The capacity, you expect levels to remain about where they are?
Yeah, I would be very surprised to see any of the major carriers adding to capacity until there's actual evidence of a recovery. It would be foolish to do so right now.
Is that also the case, Jim, on the international front?
International front, things are actually a little bit worse over there for the pure international carriers, like the non-U.S. international carriers. They've been cutting capacity more drastically, which should, once we start to see a pickup, allow for some pricing power.
So AMR tried to woo customers with a new ad campaign. They also increased the fees on checked baggage. Apparently wasn't enough. Again, AMR still reporting a loss, albeit a narrowing loss. What else does AMR have to do? Does it have any more tricks up its sleeve in terms of strategy?
There's really nothing the industry as a whole, including AMR, can do right now. They're just trying to woo leisure travelers because business travelers are not flying. Business travel is off over 25–30% right now compared to last year. Yields are sharply down, so they just have to try and keep their planes full and wait for demand to come back in a meaningful way so that they can raise fares at that time.
So, Jim, where should investors be looking?
Well, our favorite picks are in the ones that are the most distressed, the legacy carriers that saw the biggest drop. So we like Continental. They have a strong business travel base. So once business travelers do start to fly again, which we hope is next year, we think that the stock will do well.
And, Jim, in about 20 seconds, holiday season approaching, as Lori hinted at, are passengers going to see some relief?
Passengers are going to see sharp fare increases during the peak travel season because leisure travel has been so strong for the airlines because they've been discounting. Planes are very full right now. So you're seeing some good deals right now if you're flying off peak, but during peak seasons, it's going to be a different story.
Jim Corridore, airlines analyst at Standard & Poor's, joining us this afternoon. Jim, thanks.
Thank you, Mark.